Welcome back, Alpha Hunters. Hope everybody is doing fantastic this Friday, the February the 2nd of 2024. The markets are closed, so let's go ahead and wrap up what went on this week because there was a lot that went on this week. Monday, not really a big gap, kind of just hung out. We didn't really do a whole lot until we got to roughly about that last hour of the day, and then we kind of had a little bit of a pump there. And there you go. That's kind of how Monday ended. We weren't really doing a whole lot there that day. Tuesday, we literally didn't do a whole lot. Kind of a little bit of a gap down, but just traded sideways the whole day. And then we started getting into the fireworks time period of the week. Tuesday after the bell, we got Microsoft and Alphabet earnings. And I'm going to try and go through kind of the events of the week as we go through this. But Microsoft and Alphabet earnings, they were pretty good. Alphabet has an issue with growth on ad revenue. Like, ad revenue didn't come in well, and I've kind of been, we've been saying it on the channel. It's very difficult to see a path forward for Alphabet where they continue to be dominant in the ad internet space when people are no longer going to websites or going to different web pages or whatever, because that's where they generate ad revenue. That or search, or when you search and you see an ad there, people would click on that. But now with AI, people are just asking questions. They're finally starting to get hit a little bit on ad revenue. So it's gonna be curious to see how that kind of goes and how that's going to affect them going forward. Is Alphabet and Google going away? No, they're not. But they're not going to be the dominant player that they once were in that space going forward. So that's just kind of the way I'd imagine that story probably continues to play out that way. Microsoft did very well. They're going to have great growth continued going forward. The way that they are executing on their AI strategy by hosting AI in their cloud service, like, that just makes sense. You don't have to worry about developing AI. If it doesn't work out, it's not a big deal. But they benefit from it because, well, if you're developing AI and you're using their cloud, well, you got to pay them for the cloud. So it makes perfect sense. That way you don't focus on just one cloud or AI service. You're focused on many of them. So that works really beneficial for them. Kind of mentioned that last year when they kind of mentioned their strategy and what their strategy was around AI. That was a winning idea. So it sounded very good. Microsoft, though, didn't really gap up. Didn't really have a bad day. It didn't have a bad day, but it wasn't crazy. Alphabet was the big loser on Wednesday with that gap down from their earnings. So yeah, Wednesday we had a nice little gap down, kind of pulled down a little bit, went sideways, and then we got to the Fed on Wednesday. They did hold interest rates flat. They did not make any changes. So we dropped initially, and then we got a pump, and then we got the rollover for the last hour and a half or so. And basically, we pulled into the 10 daily moving average on this move, on this quick sell down here at the end of the day. So it just kind of made sense to not be bearish anymore at that point in time because people buy off that 10 EMA on the daily. And we were pretty well extended for about the past week and a half above it. So kind of made sense that you got a little bit of a pullback to it. So we gapped up a little bit there on Thursday, pumped higher a little bit, nice little rollover, took the daily low. Did not get back down to the low there on Wednesday though. And then we just kind of went bullish, traded bullish there all the way into the close. We got to then Thursday after the bell, and that is where we got the three other big tech earnings players of the week: AAPL, Amazon, and Meta. Okay, Meta saved the market this week because we could have very much rolled over here on Friday, but we didn't. AAPL did not do well. We kind of been mentioning on this channel, kind of been talking about it. AAPL doesn't really have any good growth prospects. Not that they are not growing, but they are not growing as fast and as well as the other big tech companies. So I don't really see why the benefit of investing in AAPL. We are super concentrated in this market, and it seems like AAPL, along with Alphabet, are the ones that are starting to fall off the bandwagon, right? They're starting to get left behind. And we're now starting to get even more concentrated into just a few names that continue to push the market higher. So AAPL did not help out, although it did gap down pretty strong on Friday. It traded basically all the way back up, kind of even there on Friday for the day. Did end negative, but that's how AAPL was there on Friday. Amazon kind of took the path of Microsoft. Seems like they're having a reacceleration of their cloud growth. That was kind of the thing that really kind of helped them do well over earnings. So it seems like they might be taking the Microsoft approach of maybe not trying to develop AI themselves, but just hosting it, and probably going to be a really smart strategy. So from now, yeah, I don't think Amazon's going to be too bad to probably be in. But the problem with Amazon is, well, they have Amazon.com. So if we do have a turnover in consumer activity, Amazon does not do well in those environments because Amazon.com, the retail business, has huge expenses associated with it that they can't really get away from easily. So now Meta. Okay, so Meta, they announced one thing that really kind of saved the week. They announced a dividend. First time quarterly dividend coming in. I think it's going to be 50 cents going forward every quarter. So yeah, that was what's in the Meta just absolutely bonkers on Friday. I think they were up over 20% for a good part of the day. I don't know what they actually closed at, but yeah, Meta crushed it. Even their earnings were going good. I'm still not one. I just don't care to trust Zuckerberg because he still has this infatuation with the metaverse, in my opinion, that I don't care for. So as far as like the company, they're executing on the things that they should be executing, the things they should have been focused on 2 years ago. They're executing on those things. So that's fantastic. So Friday, SPY, a little bit of a gap up. Now the other thing we got Friday morning, real quick, is we also got jobs data. So real quick, we got unemployment rate that came in at 3.7%, and the market was expecting 3.8%. So a little bit of a drop there from the forecast, but it was flat. So it's been flat basically here for 3 months at 3.7% here on the unemployment rate. Non-farm payrolls though came in very high. So that was probably the more bigger story to talk about Friday morning, was the non-farm payrolls being as high as it was. And we'll get into what the yield and dollar did just a little bit later. But that kind of brought back, the market was expected to gap up pretty good. But you see that we barely gapped up here on the SPY, and the Qs gapped up pretty good, mostly because tech was heavily, weighed on the Qs. But yeah, yields were very strong as well as the dollar on Friday. And if we continue to push bullish on the market and yields and dollar continue to go up, man, that'll be an interesting one going forward. So Friday though, SP 500 just kind of pushed bullish right out the gate. Not really too much going on. We got a quick snapback here in the middle part of the day, and then we continued higher. All-time highs here on the SPY, so looking pretty good there. And then nice little drop there. Last 30 minutes, kind of a little bit of a pullback. Nothing too scary. I'd imagine we probably just continue higher, but we'll talk a little bit more about that a little bit later. All right, take a look here at sector performance for the week. We have discretionaries. XLY outperforming the most for the week. XLC outperforming. Also, staples, healthcare, industrials, all outperformed. Underperformers, financials, materials, utilities, tech, XLK there, real estate, and energies underperforming. Now you can see really just how crazy this week was with some of these sectors and some of the earnings that went on, because you see the XLC second best sector on the week, but going into Friday at the end of day on Thursday, they were the worst performing sectors. So that's how much Meta mattered on Friday. So it's kind of an interesting week. Really fun to watch this week. The weeks like this are always fun when you got all this kind of news kind of going on. Makes for a really fun week. VIX, well, it's continuing to kind of trend up. Not too much kind of going on here. Kind of a quiet week on the VIX side. This wick that we got, I believe it's on Monday. Yeah, that wick's fake. So yeah, it is what it is. But I mean, we didn't really do too much for how crazy this week was. I mean, it's just kind of flat. Still kind of trending up, and I mean, so is the market. So it's kind of weird that the VIX is not at the lower levels that it was back in December, but it is what it is. So the VIX a little bit higher level right now, and we'll see what happens going forward. Okay, the DXY, we finally got a very solid move here on the dollar. We continued to kind of throw wicks around, up or down as we went into Wednesday, and then Thursday we had a very solid close lower. Hadn't gotten below some of the lower wicks that we've put in over the past half month, but It was definitely the biggest deviation kind of close there we've had there in a while. And you were thinking maybe Friday we're going to continue lower and break down. Well, we got the jobs data, non-farm payroll and all that kind of stuff, and it jumped. Look at that move on Friday. That's a very solid consolidation here for the past half month. You thinking maybe we're breaking down on Thursday and you got, a break up, the following day. So this looks pretty good with that consolidation being right here below this level that we put in kind of back in December. You're thinking maybe we just kind of push through that level here this next week. So it's going to be really interesting to see how the dollar reacts going forward. But right now, I would say it looks kind of bullish. GLD, the Gold Trust, a little bit of a lower wick there on Monday, a little bit of higher open there also on Monday. Kind of settled out there Tuesday, Wednesday, a little bit of a push higher on Thursday, but Friday with that dollar move came right back down. This still looks pretty good. I'd still just rather be bullish here. Nothing crazy, but it's starting to look pretty good. Even there's been some times where dollar's been bullish and this thing, gold, has also been bullish. So it might struggle for a bit, but if dollar goes on a really strong run, maybe we'll see a little bit more of a pullback on gold. I'm not going to be crazy about a pullback. I'd rather just still be buying the dips on gold. 10-year yield. All right, this is also like that dollar, but not as resting over the past half month. We had a nice little breakdown to start the week. Nice little lower wick there on Thursday. Nice pump there on Friday. Here's the thing about the 10-year yields. I want to say that was maybe a bottom, and maybe we're going to push back up on yields. The thing is that could have been just a very quick retest into the moving averages after the breakdown that we had earlier in the week. So it will be interesting to see what happens this next week on yields. If we get through these moving averages, especially that 50 moving average, I'd be willing to be a little bit more bullish on yields. So that would probably just be bearish on bonds. 10-2 inversion. Just kind of pulled back this week. Nothing crazy. The one thing I'll say is it kind of did just pull into this little pivot spot that we had back on December 1st. Maybe we bounce there. We'll see. Not sure. 10-2 inversion, just kind of doing this thing. HYG, so this is kind of what I mentioned about bonds. They're just not doing a whole lot. Still just kind of consolidating. We had tried to break out of this kind of downtrending high that we had coming through here. It was kind of like a false breakout. We came right back down Wednesday, Thursday, gap down, got traded higher, and then obviously Friday got a huge gap down from the jobs data and the impact that it put on yields and dollar. So you got bonds kind of either consolidating or that have made some moves bullish and now they don't look as good. I think right now bonds are good. I'll wait and see what happens because there's not really good levels for now. Still, they're just kind of still just setting up. But when they break these consolidation areas, that's the HYG, but they break these consolidation areas, we'll have some pretty good moves, I'd imagine, follow after that. So we're going to have a pretty good support level here around 108.50 here on the LQD. Or we get back above 111. That'd be interesting. The TLT. Also, we have a pretty good supported base down here. And that's the other thing is TLT just kind of snapped back to the 10 and 20 moving average. So, we're at a very interesting spot here on the bonds. I don't really want to make a call. Obviously, you can very clearly say, like, hey, you know what? We made a positive bullish move, and we just snapped down to the 10 and 20. Maybe you do want to be bullish off that. I can make that case. The thing I don't like about it is we also, on this move, this week, we kind of came into the lows of kind of the support level that we put in back in late December. And then we broke that down and then we rolled over. So that could have been a quick retest of that level. And now we're going to roll over again. It's kind of an interesting one. So I'd rather just sit here. I'd rather wait because if we break the support levels that we've put in here over the past month, 2 months on some of these bonds, then we're going to go lower. So that would be a little bit more of a sure thing. If we wind up breaking up, then or popping bullish and breaking out, then we'll probably just continue bullish. So that's the thing. I would just rather wait. I don't want to get chopped around in these levels, and it might be a little more choppy in here for a little while longer. So I don't want to get chopped around. I'll just be patient here. let things set up. We'll see how things break out or down later on. All right, RSP. Well, the RSP is, yeah. I mean, it's still just doing its thing. Still just kind of hanging out, consolidating up at these levels it's been at for about a month and a half now. So, is something going to happen soon? Maybe. It ended negative today, so it did pull back. Let me look intraday. So, yeah, it had a nice little pullback there in the last 30 minutes or so. This is one that I don't really know because it looks like it was going to be bullish. Well, we got kind of a continuation here this week, a couple different times. They're on Tuesday and Friday over the December high. So I don't know. To me, this looked like we were going to continue higher, but now we tried to continue higher, and that's 2 wicks up, above that December high in a row that we haven't held. So I don't know. To me, I think if we don't break up soon, I would be kind of tempted to maybe start looking into the bearish direction, but we'll have to see how this looks this next week. If we get a couple more days without breaking out and we're just kind of sideways, I would be looking for the breakdown. Maybe Monday. If we don't break out on Monday, I would be looking for the breakdown probably Tuesday, Wednesday, Thursday, that kind of thing. So that's the way I'm thinking about the RSP, because I thought we would have probably continued higher by now. I mean, we've been in this sideways area here for the past month and a half. So typically the market does not last that long at a certain price level like this. This is kind of nuts. The DIA, the Dow Jones Industrial Average ETF, nice continuation higher. Not much to say. Looking pretty good. There you go. I would say if you have stop losses, you're probably just moving up to the lows that were put in on Wednesday and Thursday. Other than that, I think you're just riding it higher for now. IWM, man. This thing last week, it was setting up like we were going to pop bullish, and kind of mentioned that, like, yeah, this thing looks like, I mean, we had that lower wick that kind of retested in the 10 and 20 moving average, and then Friday, an even higher low. It was looking like we were then going to break up, and we did that on Monday. We did that immediately on Monday, and then immediately reversed on Tuesday. And then Wednesday broke down, even carried into Thursday, a lower wick off the 50 EMA. Friday, a little bit of a lower open, but it kind of didn't break down or break out up all that much. Under the 10 and 20, but above the 50. So might get sandwiched in here for a little bit, but this is starting to not look good for the IWM. You definitely wanted to see this continue higher, kind of maybe push up to these levels, pull back a little bit, and then break the 204, 205, 206 level and break out. But now that we broke down, the middle part of this week on the IWM, I'm starting to think that this thing is going to roll over, because we got that breakout on Monday. We got that break higher through these kind of highs that we had clearly been selling off of the previous week, but definitely did not hold and immediately rejected. Once it did hold on Monday, it came back Tuesday, Wednesday. So I would be more willing to take an entry below that 50 EMA, below that lower wick on Thursday. And honestly, I think we would wind up, if we did wind up doing that, we would probably wind up breaking this low that we did put back in the middle of January. Anyways, that does not look good. The Qs, triple freaking Qs, man. We had some very interesting price action on the Qs this week. Obviously, with big tech earnings, you're going to have big time price action. So you had a little bit of a island reversal here over the previous, early parts of this week, late last week here. It's not a perfect island reversal. We got that gap down on Wednesday. That was from, Microsoft and Alphabet earnings. So we got this gap down, and then Thursday we kind of traded in that same area. And then Friday we got the gap up. So you had an island reversal for 5 days island reversal. Then you have a 2-day abandoned baby. Like, it's crazy. You don't even make this up. Just kind of nuts, man. I don't see that one too often. So sometimes you got to appreciate the market things that it gives you. Anyways, we did make a new high above that January 24th high, but the Qs are starting to really lag behind. Remember what I said earlier in the video? Apple has kind of fallen off the bandwagon. It has not been performing well. right? I'm going to quickly go over to AAPL. It has not been performing well. It topped out in December, had a strong sell-off to start the year, kind of faded there even at the end of December, but dropped off there very strong to start the year. It got one upgrade from Bank of America, and it went on a 5-day run. And then the past week and a half, it came right back down, took out those lows, gapped below them, but people took the opportunity to buy it up because it's, it's AAPL. It's the same people that's been doing that over the past decade, and they think that yeah, it's going to be continuing to do the same thing as it's always done. But like, they don't have any great growth prospects. So between that and Alphabet, those are two heavyweights in the queues. They're starting to fall off. Is Microsoft, Amazon, Meta, Nvidia, AMD all gonna kind of help pick up what those two are gonna leave behind? Maybe. I would be watching AAPL maybe this next week, because if they start to roll back over, which I think it's very highly likely that they will here, roll over the next week or two from that huge gap down and then buy up that we had on Friday, I would be very skeptical on the market, very skeptical. So anyways, Q's not really crazy price action, week over week, but intra week was kind of nuts here, mostly just because we had huge earnings this week. SPY, SP 500, this looks a little bit better. Obviously, clearly all-time highs, not just barely squeaking it out over the prior week. This looks pretty good. I'm not really seeing the market continue to broaden out in the bullishness. I just think it's getting more and more concentrated, and that's the whole Alphabet, Apple kind of not really holding up their end of the bargain during earnings time. There's nothing really to say other than the fact you're going to be bullish. You're just going to be trailing stop losses. The most important zone right now in the market is going to be this one, still back from the second half of December, first half of January. We kind of chop sideways. You can also trail it pretty tightly. Obviously a stop loss below this low that we put in this past Wednesday on January 31st is very important. That low is very important because we come down through that low, we're also going to come down to this zone. And then I think if we, next time we probably come down to this zone, you're probably just looking to probably break down anyways. So you're just going to ride it. I mean, we're just in bubble territory. We're not broadening out on a rally, and that's very evident from the RSP that has done nothing over the past month and a half. So it is what it is. It's just super concentrated into the tech names, and that's just the way it goes. And real quick, I just wanted to show this. This is the heat map so far year to date, and this is kind of the other thing I kind of want to show as it's not all great out there, right? You got Tesla down 25%. You got a lot of red in here with financials. There's some green too, but it's not just all green like tech is. Tech is pretty much for the most part largely green. Even down here, Apple's basically flat for the year. Nvidia's up 35%. AVGO, Broadcom's up 12%. Intel's down 13.5%. Texas Instruments is down almost 6%. Qualcomm's flat. AMD's up 23%. So it's outside of big tech. Like it's got a lot of red out there. Industrials, utilities, some manufacturing stuff doing pretty good. Cat GE, some pharmaceuticals, they did pretty well. I remember on earnings they were doing pretty good. So energy's not really crushing it. Staples doing okay. Procter & Gamble actually did really good on their earnings. So yeah, it's not all great out there. I mean, outside of the big tech stuff and really just tech stuff in general, it's just not super duper good. It's okay. It's okay. But we went into this earnings season. There's been a lot of revisions lower for earnings. So yeah, we'll see how things kind of continue to develop going forward. But I mean, if you're playing and you're bullish in some of these names, I would just kind of move stop losses up underneath the most recent kind of bearish activity. So like on the SPY here, Wednesday, most recent bearish activity, you're probably just moving a stop loss there, or at least a trigger or an alert. Maybe not a trigger, but an alert. Say, hey, give me a notification if we move below this price level. Dude, you're gonna want to know, like, hey, we're starting to change directions here. What do you want to do? At least be aware of it. Maybe you don't do something, and then take in, assess, and then maybe make a decision, something like that. So, Alpha Funders, have a great weekend. Take care, and we'll talk next week. Alrighty, take care, Alpha Funders.